Hi, everyone, this is the Smart Invest. In this video, I will talk about what investment is and introduce the 6 best investment assets. In this video, we will talk about what an investment is. Let's get familiar with the concept of investment. Important to note that there is no financial advice in this video. If you think you see any, it's purely a product of your imagination. What is an investment? Why is it important to invest? With investments, we can achieve things that simple savings would take much longer to reach due to inflation, or we might not reach them at all because they could become too expensive. Example: what happens if I want to buy a Bentley today, which costs $150,000? Do you know why not? Because I'm not Bill Gates. But not even a small business owner or a down-and-out mobster. So, I have to work hard and try to save $1,500 every month. In the meantime, inflation doesn't sleep, it's an average of 2.5% annually. After 10 years of hard work, taking inflation into account, I'd have $159,000. Not the best investment after 10 years of saving, I would add. Due to inflation, I've already lost $20,000 over 10 years. On the other hand, what happens if I invest the $1,500 monthly and achieve a 6% real annual return? Real return is one of the most important indicators in investments, showing how much return an investment generates while considering inflation. Real return represents the return adjusted for inflation. After 7 years, I'll have $156,000. After 10 years, I'll have $245,000. I can buy a Bentley and a Rolex. Maybe there will even be something left for prostitutes. This is why investment is important in our lives. But what investment tools do we know? 1. Stocks. This is one of the most volatile forms of investment. And that's precisely why stocks can achieve the highest returns. This is known as the risk premium. The risk premium is the additional return or income that an investor expects to receive for being willing to invest in riskier or more volatile assets, such as stocks or higher-yielding bonds, instead of choosing safer or lower-yielding assets, such as government bonds. This has changed somewhat since the advent of crypto. Since crypto is a new asset class with relatively small market capitalization, it currently has higher volatility. 2. Bonds. You buy government bonds, which offer lower but predictable annual returns, and when they mature, you're guaranteed to be paid back. Sometimes, companies issue corporate bonds with a fixed return. However, what appears to be a safe and sure return can easily turn into a financial disaster if you're not cautious. You can only lose your investment if the company or the government goes bankrupt in the meantime. 3. Hedge funds. These are companies that manage your money for a fee and try to achieve returns above the market index. There are active and passive funds. It's essential to note that in most cases, active investment funds are unable to achieve returns above the market index over the long term. 4. ETFs. Nowadays, one of the most popular investment tools is ETFs. An ETF, or exchange-traded fund, is an investment fund that trades on the stock exchange and holds a wide range of assets, such as stocks, bonds, commodities, or other assets. The ETF is a passive investment tool that fundamentally tracks the performance of a particular market index or asset class. ETF shares can be bought and sold on the stock exchange just like any other stock. 70% of the stock market capitalization is in passive ETFs. The two most well-known ones are the S&P 500 and the Nasdaq 100. They have performed very well in the last 10 years, but according to many indicators, they are currently overvalued, so there is no guarantee of such good returns for the next 10 years. If you liked the content and found it useful, please press the like button to help the algorithm. Press subscribe and the bell if you don't want to miss my next video, where we will talk about how you can find the best investment form for yourself. 5. Real estate. A very common form of investment is when you invest your money in real estate. You try to buy real estate with a lower fixed mortgage interest rate than expected inflation and wait for them to appreciate. If you spend more time on it, you can even rent them out on platforms like Airbnb for extra profit. Cryptocurrencies. Cryptocurrencies are even riskier assets, but in exchange, they can achieve enormous returns for those willing to take on the extra risk. Unlike stocks, cryptocurrencies don't have much fundamental analysis, so their fair value is undetermined. Therefore, they can either rise significantly or crash. 6. gold and silver. We can also hold investment assets such as gold or silver. Gold hasn't been able to achieve real returns so far, but it can be an excellent asset for hedging against inflation. It might seem like a good idea to hold oil, but futures markets are not suitable for long-term oil storage. Having a massive oil tank next to your house would look quite odd. Thank you for watching this video. If you have any questions, please feel free to ask in the comments, and we'll see you next week.